All right, everyone. So in today's episode, I'm going to give you the game plan for the week ahead, starting with Monday, July 8th. We're going to jump into the charts here, and we're going to begin by taking a look at the action from the last few days. So Friday, we finished the week. Of course, it was a little bit of a funny week because we had the 4th of July holiday on Thursday, a half day on Wednesday. Although, the half day was kind of funny because the market closed at 1 p.m., but then after hours continued. So after hours just began earlier. So some people just continue to trade until 4 p.m. like sort of normal. Anyways, kind of a weird day, but sort of a funny week in total. But the wild card was Koss, Koss. And this, without a doubt, gave me a nice cushion for the month of July. So if we look at my metrics here, we'll see, boom, that was the $8,000 from July 3rd, Wednesday. Now, we'll talk about my metrics in a second. As I've got some feedback from some of the episodes that some people don't like looking at the metrics. They just want the game plan for the week ahead. And the thing that I'll say is that I feel like the metrics are important because they set the stage and give the context for what's happening and what's working in the current market. So I'm still going to go over my metrics, but I'll try to focus a little bit more on the game plan for the week ahead. So, of course, I can't talk about the week ahead without looking at Koss and looking at its price action, asking the question of, is this something that I should trade on Monday? Based on the current chart, the way it's currently set up right now, and of course the market's closed, but based on what I'm seeing right now at this moment, I feel like it's going to reject and roll over. We have basically a double top up here around 18. So a big squeeze, pushed back higher up to 18 on Friday, and then kind of rolled over, and we got this telling rejection. You see that rejection right there? So we'll full screen this and we'll zoom into it. I think that rejection is very telling. Now, if we had been able to hold over the volume weighted average price and close up around even just anything over the VWAP, if we'd been able to close over VWAP, that would have been significant. Now, if we look at the previous trading session back here, you could see that we closed, we were ramping higher. We had this parabolic move up to 18. We came back down hard off of VWAP, but we held VWAP. And so after hours, we held VWAP, which then gave us a nice setup into the next day. Of course, VWAP resets each morning. It's an intraday indicator only. So it resets. We were below it, but then back above it. And for the most part, we weren't able to hold above it on Friday. So the fact is we ended up closing with this final kind of red candle going right into like 8 p.m. It was 8 p.m. Friday. So because of that, I feel like this chart is breaking down. I'll acknowledge that the spike here was on the highest volume candle of this whole run up right there. So really high volume. And I think probably that was in part because half day going into the holiday, a lot of people probably weren't even trading. And this was sort of unexpected. But then after they saw all the chatter about this move on Reddit or Twitter or whatever, YouTube, etc., then they were ready for the next day, so maybe more volume here. This move, which was pretty nice, was actually on very light volume, which is also kind of interesting. So it can move on light volume pre-market. It's possible that we'll see some more action in it, But the thing that I'm concerned about is the fact that without a headline from the company, what would really send it to sort of the next leg up? Does it have a high level of short interest, of shorts that are currently kind of buried on it? Well, the reported short interest is always a little bit delayed. So I'm sure there's some people that got heavy short in this move that may still be holding, but they also may have covered after this rejection of the double top came all the way back down to here. So they may have been covering below VWAP. Maybe they got in too early, but then added to the position, and then covered break even or for some profit. So in terms of day trading short sellers, I don't know if they're really still underwater on it here. I mean, it is obviously up quite a lot, but I don't know. I don't see right now what the catalyst would be that would send this to the next level. However, I did comment that if we got a meme from Roaring Kitty, let's say, he posted something with like little headphones, then all of a sudden because Koss makes headphones, and that could ignite some momentum. But I don't, I mean, that's kind of probably unlikely. So I think that Koss is going to be out of play. We also on the daily have this tweezer top, which is a big rejection. If we look at the history of this chart, we get moves, but they don't usually sustain. The last time we had a run that was really sustained was really back in 2021. And everything else has been kind of like a couple of days of action and then a fade. So I think we may have gotten the most we're going to get on it. And to be honest, I'm impressed we even got this. But this was really a fantastic move. So probably can't ask for a whole lot more. Maybe wish I had made a little bit more on it than I did, but I suppose we could all say that. So Koss going into Monday, I don't think that I think people will still trade it, but I don't think it's going to be super clean. Okay, so Zapp, Z-A-P-P. Okay, so this one is a little different because Z-A-P-P going into the close, is it above VWAP? It is, right? So we had this big move, squeeze all the way up to 520, nasty rejection of VWAP, sold off, and then into power hour, it rallies back up to 420 and closes at 428. So now this is set up for continuation into Monday, which is going to be something definitely to watch. In terms of ascending support, these levels are too far away to really be super valid. So probably not respecting that right now or paying much attention to that. Up in this area, it's not super valid there either. It only really touches in a couple spots. Right there, there. Nah, not sure about that. I kind of sometimes will try to test out these trend lines and see where do they feel kind of most accurate. That one feels accurate. Like, yes, it got below it, but then back above it. So that could be a level to watch for a dip. Now, 4 a.m., I'm not going to be trading that early. Those of you guys that are in a time zone that's convenient for that or you're up that early, that's fine. But could watch around this level if we go below it and then back above it. But the thing that this has going for it is we step back to the daily chart and we've got room to the 200, a lot of room. Now, we did tap the 200 EMA here. This is the exponential moving average. So kind of, and it is a red candle on Friday. So, it's a gap up, but it closed a little lower than the open. So red volume bar could be a little bit of an issue there. Room on the daily, probably up to this 675 level. I think we've got a little pocket up to there, and without the EMA resistance, I think it's something to keep an eye on. It floats 4.29 million shares, which is good. Let's see. So, in total, I think it's definitely interesting. Let me look at let's see, filings on Zapp. So, interesting. Okay. Right. So I'm just looking to see if there's any recent offerings, and I'm not seeing it. I was looking for a shelf registration. So April. Right. Yeah. I have to look into the balance sheet on this a little bit to see whether or not there's a likelihood of them needing to raise cash. But I'll look at that. I'll spend some time doing that on Monday. So, all right. So ZAPP, it's worth keeping an eye on. You got to do a little bit more research on it. A risk is that sometimes after a stock is up for a number of days, you start to have a higher likelihood of the company doing an offering. So that's where we could have a little problem. So something to be aware of there. Okay, then we have BENF, which was up 122%. This one ended up being kind of a surprise squeeze on Friday. Kind of just out of nowhere, halts up, dip and rip in a second halt, sells off, then rips all the way to 650. I mean, it's like unbelievable. But thinly traded on light volume. Ends up closing, okay, but a couple of rejection candles. It wasn't, it was on light volume. That was kind of the problem. This is one that I actually lost money on I think it was a pre-market trade at some point last month. So when I saw it, I was a little like, I don't know. I guess it ended up with 40 million shares by the end of the day, but the initial move was on light volume. Again, 200 moving average with lots of room, right? The float's 1.4 million shares. So it's just the lack of a catalyst that I think is a little bit unsettling on this, but it's, it's worth keeping an eye on. I guess we've got news here from Wednesday. Conclusion of investigation. I don't know. So anyways, it's up. So that one, I'm not sure about that. MDWD, but I'm going to put it on a side chart. BENF, Zapp, ZAPP. By the way, S&P 500 closing at all-time highs. So this is, again, closing just under all-time highs, but we made a new high on Friday. So overall market, just really, really strong. Now, for those of you that aren't invested in the overall market, I guess, you're not necessarily reaping the direct benefit. For traders like myself that have been trading for a decade or more, most of us have been able to take some day trading profits and build it up into long-term positions that we're holding in the market. So this certainly benefits us in that regard, but this also will indirectly benefit you just in the sense that an overall strong market is going to lead the way and small caps usually lag behind. But when we have a market that's really strong, that rising tide lifts all ships. So that will trickle down, so to speak, to small caps. What I think is holding up small cap markets are the high cost of borrowing, interest rates being high. That needs to come down to see more, I think, economic growth in small caps. But anyways, good to see the overall market. So anyways, putting Zapp on side chart, BENF on a side chart. ANVS surprisingly also made a bit of a move on Friday and closed near its highs. So interesting pattern there. It's a stock that can move fast. So I would keep that on a side chart as well, just because of the strong close and the fact that it went from 750 to 11, right? This is a stock that can go from 11 to 15. It can move fast. The daily chart, little peak right there around 12 and then room up to 20. And if we look at that move, you could see how we're kind of like these were a little double top right around this area here. Not to be exact, but just right in that area. So then that gives us room up to 1250. So we're holding above that. Again, this is very light volume right here. So with just a little volume, we'd easily dip back down under that level, back to this area of support. I would say you could probably see some ascending support in here, but it's a little bit of a steep line. So that's something to keep an eye on. So ANVS is on watch over here, BENF and Zapp on watch right there. MDWD, this is probably going to be a little too expensive. I did get a trade on it on Friday, made some money on it, but I don't think I'm going to overstay my welcome. XHG, I think this is kind of a one-hit wonder penny stock move. That V formation, take what you can get on it. It's I don't think there's anything more to trade on that. A couple other stocks with lighter volume that were hitting the scanners. Ride, RYDE, daily all-time highs, blue sky over about 11, but light volume. Probably going to need to see some more action on that. So I think that gives us kind of a big picture there. And something that I think is kind of interesting is look at like the last last week or whatever. Look at how small a lot of these green days are. Really small green days. The market was like really slow. Just the last couple weeks. Very, very slow. Red day, but small red day. Keeping it all really tight, which is great. Really manageable. And then nice $8,000 green day. So this, I would say, is reflecting that kind of strategy of laying in the tall grasses, kind of laying low, get a couple little strikes, small strike. All right, nothing's really biting yet. Like a little win, and then boom, get a big one. All right, great. Now hunker back down, right? So hunkered back down on Friday. Now, granted, Friday I was up 2,000 and ended up giving back, most of that. But if I can avoid days like this, then I'll be in better shape. Now, that was back in the beginning of June, so more than a month ago now. Trying to put space between me and that red day. Have had a couple red days since, right? And kept them really small and manageable. This, I love. Even if I don't have huge, big green days, I love that the red days are small. And even if the green days are a little smaller because I'm managing my risk, that's okay because then periodically when we have something that really sets up, boom, those big green days just add icing to the cake. So you could see like my P&L sort of sideways and then a nice jump up. And then maybe sideways and another jump up. I'm okay with that. We step back to 90 days. We step back to 60 days, 90 days. And you can see, I mean, we're talking $200,000 of profit here. Now, I'll remind you, as always, my results aren't typical, but this is the result of managing risk, keeping, things in check for the most part. Have had a couple slip ups, right? I'm only human, only flesh and blood, and I fall victim to FOMO and frustration and stubbornness like anyone else. But what I'm trying to do is keep the space between these days as far as I can. So, this was a nice long stretch here where I felt really good. And then I was disappointed by this red day. And then I recouped it like so fast. It was like, whoa. And then, but I don't think I really kind of was cured of the illness of FOMO. Came back and got me there. Another nice big green day, and then look at that. It's very common. Big green day, you get a little overconfident, you give it back. Big green day, overconfident, you give it back. So this is where I've got to be careful when I have decent green days, that I don't get overconfident, that I keep my risk in check, and I just stay focused. Now, I struggled with this a little bit on Friday. On Friday, I felt frustrated that I didn't trade Koss better. I was disappointed in myself, and I really did have a hard time pulling myself away from the screen. I was like, first of all, I had missed this first move. We were out late on the 4th of July. We had gone to a concert, and I honestly, I didn't expect Friday on the 5th that there would be any action. Although Koss had closed relatively strong, I still just, I was like, it's Friday the 5th. I don't think we'll have a lot. Anyway, so I ended up missing this move. I sit down like right here, and I end up getting, a little trade on one of these pops. I got up to grab some water and missed this pop and drop, which I would have probably lost money on if I'd been in it for it. And then, it starts to pull away, and I trade it with small size, and then I end up getting caught in this jackknife here and giving back the little I made. And I just felt annoyed, like this stock is up this much and I'm not at my daily goal. And I just kind of kept like pushing and pushing. And then I had to say, you know what, man? All right, it's not a huge green day, but you've got a little bit more in your pocket than you had 3 hours ago. Can you be grateful for that and live to trade another day? And so I pulled myself away from the computer. I said, you're right. $750. Is it my daily goal? No. But don't think of it like that. Think of it as $750 more in my pocket than I had a couple hours ago. And my window of, really being able to crush it is closing. So, call it. Come back tomorrow. Because what you don't want to do is end up having a big red day right here. It's not worth it. So I was able to pull myself away from the computer. It wasn't easy. I was frustrated, but it was the right move. And that's something that you have to really get good at, especially if you're trading like this, where, these small days are fine as long as you don't end up with these big red days in between, because then you're losing money, right? The small days are okay as long as you step up when you have a moment and you keep your risk in check. So that's what's super important. Look, red days are going to happen. That's fine, but just keep them small. And in fact, this is by gross. If we switch to net, there might be a couple more small red days here. Yeah, so that's a small red day when you factor in commissions. But again, this is small and it's totally fine. It's negligible. So this is, I would say, great. This is good trading. So this is what I want to keep up, especially during the summer months, because here's the thing with summer trading. You can have longer stretches like this where it's a little slow. And if it's a lot easier to sit kind of, with small green days when your P&L is at all-time highs. My account, is at the highest it's ever been right here, not in account balance, but in total profit. My account, I actually took money out of it. I'll pull this up so you can see. So at the beginning of the week, let's see, I dropped my account down because I felt like I was like, I just don't need this much money in my account right now. So let's see. I just don't want to put my account number on there. All right. So this is where my account was. Beginning of July, 376,000. And I was like, I just don't need that much money. So I took out 290 grand, dropped my account down, in fact, to like 83,000 or what was it? Or something in the 80s, 88,000, 86,000. And then that day I lock up $8,000. So my account's up like 10% in one day. That was solid. So anyways, now I'm working with approximately $94,000 account. And that's fine with me. I just don't need that money during this time of the year, because this is a time of year where it's easy to make big mistakes. And then you're sitting, deep in the red, and it's hard emotionally to have the wherewithal just to come in every day and focus on small base hits when you've just lost like 50 grand on an emotional, totally stupid, momentary lapse of judgment. So I took money out of my account, so I can't hit the market with $376,000 if I all of a sudden on Koss, let's say I took a bad trade and I bought 10,000 shares, it's $130,000 at 13. And then I'm down 2 points. I'm down 20 grand. And I'm like, well, I got to average down. I got to work my way out of it. Next thing you know, I'm in a $300,000 position, 30,000 shares, and I'm down, whatever. All of a sudden, right? It could be like you're losing 100 grand. And it's almost always better just to cut those losses quickly. And sometimes if you simply cannot add to a position based on account size, that forces you just to cut the loss, because it's like, well, I just better cut this. And then maybe I'll add back lower, but I just have to cut it. So summer months tend to be a little bit slower, but again, I'd emphasize what I mentioned a couple weeks ago, that this is a good time to be learning, because if you can have the discipline right now, and this is a time where you really need to cultivate discipline, that's going to really serve you well when the market heats up. So with that, I'll remind you that our 4th of July sales are underway here at Warrior Trading, so you can check these out. We've got the Day Trade Dash software. Now, this is a monthly subscription on software. The Day Trade Dash software is just this platform that you see right here. You don't get access to my live broadcasts. You don't get access to a chat room. You get all of the software, the charts, the scanners, the news feed. You do get a news broadcast and an audio squawk, but that's it. And then we've got our Warrior Starter. This you can add on my monthly live stream if you'd like. You can also add on Day Trade Dash. And then we've got our bundles here, which you can check out, which include a year of chat room access, a year of my audio video broadcast, and 90 days of using my scanners and my charts. So you get to kind of test out the different things that we offer. We also include a simulator in that bundle. So anyways, check those out if you haven't already. I do think this is a good time to be studying and focusing on building your skill. It's always better to have started, a year ago or 2 years ago. The next best time to start is now. So study up. The market will not wait for you. So you better, pay your dues, start gaining that experience and refining your own skill as a trader. I'll be here all summer long, tuning in every morning, doing my broadcast, doing my thing. And for the most part, I'm just going to focus on keeping risk tight, chipping away, small gains here, small gains there. But when we have something like Koss that starts to pull away, that's when I'm going to step up to the plate. I'm going to lean in and I'm going to try to make as much as I can on those individual days. And 5 or 10 days like that through the summer, that's gonna make or break, right? That's the difference between having a summer where I'm up hundreds of thousands of dollars and having a summer where, I'm just kind of grinding on 20,000 a month, which, hey, $20,000 a month, that's not bad, but I'd like to be up at that $50,000, $60,000 a month mark if I can. So that has me kind of targeting $10,000 to $15,000 a week in profit. And the way I break that down is, as you may recall, a daily goal is $5,000, which, doesn't happen every day. But the way I establish my weekly goal is times 3. So let's say I'm up 5 on Monday, 5 on Tuesday, 5 on Wednesday, and then 5 on Thursday, and then I'm down 5 on Friday, max loss day. So that cancels out this day here. So now my weekly is daily times 3. I figure I'm going to have, maybe one max loss day per week. Now that's fine as long as I'm averaging here. Now, if I'm averaging, 500 to 1,000 a day, then having a minus 5,000 max loss doesn't work. So this is where I've got to keep kind of everything in check to make sure my red days are, about my average green days, if not smaller, just to keep things sort of in line. So it's very possible that no matter how hard I try this summer, the total profit's going to be lighter if we don't have as many opportunities. But it's my job to manage risk. And that's it. I can't control how many stocks we have that are really solid. Like, we'll have the number of good setups that we have. That's just what the market gives us. I can control the risk that I manage. I can control how much I put into each trade and, where I set my stop losses. So that's what I'm going to be focusing on. All right. So thank you guys as always for tuning in to this game plan for the week ahead. I'm looking forward to seeing you in the chat room. If you haven't already checked out our 4th of July specials, make sure you do that. If you want to learn more about the Warrior Pro curriculum, you can come up to Day Trade Education here and click on Warrior Pro, and then you can check out FAQs. You can see the trading courses that are included, the chat room, the scanners, everything else. All right. So anyways, I hope you guys have a great weekend, and I'll see you back at it here Monday morning. And I'll remind you, as always, that trading is risky. My results aren't typical, and there is no guarantee that you'll find success, whether you trade with me or you learn on your own. So please manage your risk and always practice in a simulator before you put real money on the line. We're happy to give you access to a simulator as part of your Warrior Pro membership. So I'll see you guys in the chat room Monday morning.